following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our cards. This is by Chuck Knox. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We had the Dow Industrials up 27, NASDAQ up 16, S&P's flat. S&P's actually up 4.5. Gold contract down $4.70, trading at $1,270 an ounce. Silver off 5 cents at $19.71 an ounce. Platinum up $5 at $1,440 an ounce. Copper up a penny and a half at $3.05 a pound. Light sweet crude down 72 cents, trading at $106.18 a barrel. Bonds, you have the 10-year down 14 ticks at 123.28. 30-year off 27 at 135.04. King dollar up 138 ticks at 80.71. You got the euro down 29 at 135.45. And the yen up 30, trading at 102.13. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, what do you have? You get a sideways market. You're up $3.50. We're at 1941. 1943.35 was the high of the 12th, and that's where we went south from the 1943 to the 1925 level. You know, we're right next to that. I expect more than likely you're going to see that tested again. We go over to the SPY. You take a look at the correlation inside the SPY. What you have is this. The high of the downdraft out here on the 12th was 194.83. We're at 194.83. 194.80, rather, the high was. That was 106 million shares. We're at 194.83, and we're at 80 million. You're over that, and that says, hey, guess what? You know, you can get up to this high. I suspect we're not going to. Why? Because you have 2 levels, folks, and both of them where we're at right now, and both of them are dramatically, not dramatically higher volume. 92 million was the high, was as we broke topside on the 5th of June. We came downtown, it was 106, and right now you're at 80. NASDAQ Composite. We go take a look at the, well, here, let's do the Dow Industrials first. Dow Industrials, you take a look at the Dow Industrials. We are at 16,808. Now, that high in the Dow is 841. It's not that much further. You know, you got, what? You got you got $36. We'll see whether it can make it up to that level. If we look at the diamonds, the correlation inside the ETF structure, what you have is that we did 2.8 million shares. We're at 168. We came down with 5.4 million. So you can see it's just about double. The high of the 12th was 168.34. We got to 168.20 today. We closed at 168. NASDAQ Composite. We take a look at the composite. What do you have with the composite? Up $16. The composite got over the downdraft. And the composite actually had juice inside it. We did $1.79 billion. The way we come down on the 12th, let's just take a look on the 12th. On the way down, we came down at $1.9 billion. Composite, however, did get over that swing point. That's saying that, well, it didn't get over the downdraft. The top of the swing point is 4346. Gold contract. What do we have with gold? Okay, so let's check this out because this is going to get really intriguing here, and this is what it is. GCQ4. Both gold and silver, folks, look to me like they're ABC structures on the way up. And this is what you have. Gold today got down to $12.58, had 108,000 contracts, rejected lower price, had lighter volume. Your A point on this is $12.40. Your B is $12.85. So you get $45. 58 is the C point. So when we take a look at that, that's approximately a 1307 price projection. What we're going to need as we get into the 1285 level is contracts more than 98,000. That's going to be pretty easy to do. So we'll see how that shakes out. But that's how that metal gold is lining up right now. We go over and take a look at the silver contract. This is what we have with silver. Same setup, same ABC setup. Silver continues to look stronger. Silver got down to $19.43 today, rejected the low, had 38,000 contracts. The 38,000 was going into 62,000. So remember, when we're talking ABC structure on the way up, what you do is this. You go up with volume, you pull back with lighter volume as you're going into the B point in order to get your price projection or to bring the probability higher that you will get a one-to-one price projection. You take out the B point with volume. The B point on silver is 1987. The contracts are 48,000. The A point on this is 1861. Your B point is 1987, so you get approximately $1.20. That would bring the silver contract up to $20.60. So it's going to be, I think we get some real juice there. Oil. Let's go take a look at the oil market. What we have with oil out here is this. Let's see, where is she? CLN4. Okay, crude oil. We pulled back 71 cents. We did 223,000 contracts, and you're going against 321. So oil still wants to go higher. This break topside on the 12th, folks, looks to me like a real break. We took out a B point, took it out with volume. If you take a look at the continuous contract, what you do have is this. On the continuous contract, you have two higher swing points. Doesn't mean they have to get over them. More than likely, what you're going to see is you're going to see them tapped, though. That's 112.24 and 114, I believe, if we go out another year. Yeah, this year's. So you have the swing high that was generated August of last year, and then you have the swing high. Oh, no, it's 110 and 112. Oh, no, there she is. Yeah, 114.93. So you have 114.93 off from 2011. Those swings can get hit. The last three highs that we had out there, they couldn't sustain themselves. They couldn't hold up to those highs. Bonds. We go take a look at the 10-year bond first. What you have with the 10-year bond, she came down on 1 million contracts. That, is heavy contracts on the 10. But it's not as heavy as how we went up. But we are at 123.27, which 123.25 is that swing low. Let me go pull up the TLT and see what that correlation is inside here. Yeah, the TLT has light volume. Okay, so watch this, folks. When you on the futures, you can basically write down what the contracts were volume-wise, because every quarter, of course, they change. If you want to do it, if you do that, that's the best way to do it inside the future market. The TLT is the 20-year bond fund, 20-year plus bond fund. You can go quickly to that and see, okay, how do we pull back? We pull back with 6.4 million versus 9.7 million. Okay? So bottom line, that's a pullback with lighter volume. We're at 111.54. Yes, it can test the 110.83, which is that swing low. The 30-year bonds. We take a look at the 30-year. 30-year bond came back with 289,000 contracts, and that is light because I know we were going up in 450,000. Yeah, 447,000. Bottom line is going to need a lot more volume than that in order to break into lower price. King dollar. We go take a look at King dollar. What we have with King dollar is this. King dollar rejected lower price today. did it with lighter volume. Right now we're at 80.71. King dollar bottom line looks to me like it's going to trade up to the 81.50 mark. The thing that's amazing, folks, is that King dollar and gold and silver look like they all want to go topside simultaneously. Inside the metal market themselves, there are quite a few ABC structures on the way up. We'll see whether they take the B point out with volume, but there's plenty of them out there. Adobe, ADBE, they just come out with numbers. Let's see what they have. Let's see, ADBE. So Adobe closed at 67.54. She's trading at 69. You stay right back there, folks. We'll be back with the numbers. 877-927-6648. Coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had, let's see, Marvell was flat. You had American Express up 29 cents. Disney was down 14. DuPont was off 32. You had Big Mac up 17. JP Morgan Chase was up 55. And right now, folks, we got our man, Mr. Basil Chapman. And don't forget, folks, each and every trading day right here at TFNN, you can listen to Basil. Great program, 11 to 12 Eastern Standard Time. You can get it right on your cell phone, TFNN.MOBI. We stream live content from 9 o'clock in the morning to 6 o'clock in the evening. We stream 24 hours a day, TFNN.MOBI. If you'd like to get Basil's newsletter, outstanding newsletter, you can test drive it absolutely free. The opening call, the way you do it, go to TFNN. You'll hit newsletters. You'll hit trading newsletters, the opening call right there. Hit it, you can test drive it right here, right now. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day?
Yes, thank you.
It's a beautiful thing. So let's see. What are we looking at out here?
Well, as always, I'm just starting off here with the Dow chart that I show my subscribers every single day based on the Chapman Wave methodology. And what I have right here, and this is going to be very interesting because there's an up channel. The lines that I've drawn here show a channel, and if one can see, there's a green line at the top, a little red line. That's what I call the inside track. And every time that the Dow, or any chart that we're looking at, anytime you get to that level, and it starts reversing back down, I call that the inside track repellent or sell zone.
Okay.
And on the downside, you've got this same thing, and it's what I call the buy zone. And if and you can see that the Dow has remained in this channel, went right up to the top at 16,970 on the 9th of June. Then it made a little doji candle, started pulling back. Now what's really important is that maroon line, the thick maroon line, that's the 9-period moving average. In my work, I use that a lot for the parameters that we're looking at, and it very often acts as a magnet line. It acts as what I call walking the 9 EMA on the upside. It becomes a repellent on the downside. So where did the Dow close today? Just fractionally above. So there are 3 candles that are very small candles, but they are moving with higher highs and higher lows. So I have to respect that. At the same time, the MACD, the moving average convergence divergence, is negative, but it's flattened out, showing that there is some internal strength. But basically, it has started to turn down, and the stochastic's way down at 50%. Now, it's going to be very interesting because we've got the Fed speak tomorrow. Now, normally, my opinion always is that any major announcement, any economic discussion, anything that comes about as a news source really doesn't change a trend. Once in a while, it'll be the exact trigger to change a trend from up to down or down to up. So essentially what I've got is I've already got a sell signal that's gone to a sell mode in the daily chart. What's really interesting is the weekly chart has not given me that signal.
Okay.
So a lot's going to depend on the parameters that we're looking at here. So for the Dow to actually start to head down towards what I call that inside track lower level, the buy zone, which would be down in the low 1600s, between 16,100 and 16,000, we would need to see a close in the next few days that's, first of all, underneath today's low of 16,732, obviously, but really, it needs to go into 16,703. That was that ugly candle of the 12th. If the Dow closes underneath that, then we're probably going to head making lower lows and lower highs down towards a really big test of the 16,100 to 16,000 level. And on the upside, if there's a break tomorrow afternoon and we move higher towards the 16,850 to 16,870 level, it's only 70 points higher, I would have to consider that we're going to have a retest of the last high. So this is a really important phase because as we've seen the rotation through the different sectors, you'd have one sector that was very weak and then all of a sudden becomes strong, like the IWM missed by just a fraction, making leg D in the daily chart today. I think it's still going to do that. So for my subscribers, we've been trying to be very selective, sort of under the radar. We've actually been short a stock that was it was really one of the major movers on the upside, going from somewhere around the 120 area to 500. The high was 561, and that's AZO, AutoZone Inc. It's a car truck parts company.
Sure.
So on the monthly chart, it's made a peak D at 561.62, and it's held quite well but it just hasn't had that strength. The market has gone to new highs, all-time highs, and AZO is kind of stalling. And then the weekly chart, it made a peak F top in the Chapman wave, and this is what I discuss on my show every day. I discuss how you can use the Chapman wave methodology with the letters to be able to identify potential turns. AZO went to 561 at peak F, pulled back quite sharply. It went down to the 510 area in April, and now it's making a potential arch formation. That's the pattern that I call the lowercase h. There's a chance now. So we shorted up in the 532 area, and it's trading now at 524. It hit the other day, it hit 520. So the last 3 days, I'll open this chart up a little bit. So the one on the right is the monthly, and the middle is the weekly, and here comes the day. I'll open it up a little. And you'll see that the weight of evidence says that it's really struggling to hold gains. It has these strong down red candles, and the MACD's negative, stochastic's negative. The 120-minute chart just say, hey, be a little careful here. There could be a bounce. I'll just lifted this up, and that shows that there's a big rectangle formation. It's made a constant peak D and pull back, then E and pull back. So I'm watching it real closely because it hasn't shown any strength with the market moving up, and the technicals have improved. So I've got to watch that a little bit carefully here to see that there isn't a stronger bounce. I'm anticipating a little bit of a bounce, but not a very strong bounce. Because if AZO, the auto parts company, is starting to move down, then possibly, and this is part of the rotation, we just might see Ford and General Motors start to move higher, saying that people are buying newer cars, and the older cars they're getting rid of. And that's kind of the way I look at AutoZone at this particular point. So if AutoZone does crack 516, which is the major support, that's about 8 points lower, at any stage in the next week or two, I'd say that this is, in the monthly chart, it's probably saying, hey, I need a long-term timeout, more like a couple of months. And that would be very important in terms of looking at the rotational sectors and trying to decipher what's going on.
Yeah, it's pretty cool, too, because when you take a look at something like AutoZone, that would mean the economy's getting better. You know,
exactly right.
What the key is, folks, is that, you know, instead of people fixing their cars, you know, bottom line is that they're buying new cars or used cars or whatever that is. You know?
And we know that the average has been creeping up to 12 and 13 years for people to keep cars, which is a very long time. Historically, it's a long time.
I know. Well, you know what's amazing is that there's no doubt cars last forever now. I mean, you know, I guess one of the problems are, you know, we have so many computers inside them. To get them fixed, if something does go wrong, it's a problem. You know, once you don't have a warranty on them, but.
Well, it's interesting you say that, because I have a chart that I showed today during my show, what I call my triple yield chart, and it shows the 30-year, the white with the black background. Yeah, the white is 30-year, the TYX.
Okay.
The gold is the 10-year, and the cyan light blue is 5-year.
Yeah.
And it's the yield. This is just the yield, not bonds, but the yield, because as bonds go up, yields come down.
Sure.
And yields came down to 33.04, 3.3. And they were at 3.97 just back in, that was December of this past year.
Yeah.
But they've come down and they try to bounce. So this is going to be very important, because if the yield takes out 33.04, the yields are going lower, bonds are going higher. And above 30.35, it says be a little bit careful, because bonds could be pulling back.
Listen, folks, come over to our website at TFNN, go to the newsletters, trading newsletters, open a call. You can test drive Basil's newsletter right now, right here. And don't forget, 11 to 12 every single day. Basil, have a great one, safe one. Look for the show tomorrow.
Thank you very much, Tom. You too.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 27, Nasdaq up 16, S&P's up 4.5. And as you come over to our website, folks, at TFNN, what you're going to see in the very front page, right in the carousel, you're going to see that I'm going to be doing a workshop tonight. It's a free workshop. Now, what this workshop is on is this, is that we have the Tiger Real Estate Opportunity Fund. We own quite a bit of real estate. And we are going to be putting out 11 properties for a first mortgage. I'm going to be doing a webinar from 6:30 to 7:30, walking you through exactly how this works, to basically cut to the chase and give you an idea of how it works. It is a 4-year commitment we're paying 5% annual on the mortgage, and the mortgage will be 70% of loan of value of the real estate. Let's say the real estate, I'm just ballparking, is worth $150,000. The mortgage will be for $100,000. You'd be getting $5,000 a year. It's paid monthly, so that'd be $417.67 per month. These are all brand new places, all leased out. If you would like to see how this works, first off, come over to our website at TFNN. You can see it right at the very top. You can hit that. You can register for the website tonight. If you want to see the properties, what you can do on the right-hand side, you're going to see Tiger Real Estate Opportunity Fund. Right now, and then you go to First Mortgage Portfolio. As you go to First Mortgage Portfolio, you're going to see 12 properties that are out there. 3 of these properties are already taken. So there'll be, what is that? There's 9 properties that are out there if you have a desire to be in that market. That market, the market that I'm specifically going after is people that are in the CD market, people that are saving. You get a secured investment at 5% instead of a CD rate. The downside would be that you are hooked in for 4 years. The upside is that you're getting 5%, and the second upside, well, there's a lot of upsides, but what you do also get is this, is that there's an 18-month guarantee of the 5%. What that specifically means is this. You're guaranteed 5% the whole time until you get your principal back. But what the guarantee, meaning 18 months, means is this. Let's say that for some reason real estate goes to the moon. I want to sell a property in a year. You'll still get paid 18 months in interest at 5%, even if we sell it 6 months before the 5%. You get the, after 18 months, there's no penalty. But check it out on the front page of TFNN. You can check the properties out at Tiger Real Estate Opportunity Fund. You might want to check those properties out anyway. I think they're pretty impressive. 877-927-6648. Okay, let's get over and go take a look at Big Blue. So Big Blue struggling out here. She looks to me like she's ready to do the next ABC structure on the way down. You know, she made a charge up to the 199 again. The high was 210. That charge that was made was on April 10th. We're back down to 182.26. And what we've done is this. You've basically broken swings, have some juice behind the move. It looks like she's building cause for another small ABC structure on the way down. She has a large one and a small one. This one here is a 7-point ABC structure on the way down that could very well get it into about the 175 level. The 174 to 172 level is the low that was generated on the 4th. If we go over to Amazon, this is going to be really intriguing with Amazon. Amazon, you know, hasn't been able to get out of its way. Amazon, you know, has just gone down from 403. It's at 325. You had a small sign of strength on the 5th of June. That's backing into that right now, and the reason I'm bringing this up is that tomorrow Amazon in Seattle is coming out with their handset. And that handset, I suspect, they're probably going to give it away. You know, why? Because Amazon is all about shopping, folks, okay? So Bezos is going to be out there tomorrow. Let's see. It doesn't say what. I'm sure there's a time out there. But bottom line is that this is going to be really interesting watching to see exactly what they do. Let's go to Steve in Nashville. Hey, Steve, what's going on?
Hey, Tom, how are you?
Doing great, man. You having a good day out there?
Yes, sir. It's a hot one up here, about 86.
Is it? Oh.
Like that. Oh, yeah. Yeah, it's crazy. Got the heat, got the AC going here.
That's good. You need some heat in those bones, man. Totally.
Yeah. I'm looking at this one. It's another smaller silver EXK, and I read something that I guess if they're out of the ground or whatever the total cost is to get it out is like $12.50 versus other people's $15, $18, $19.
Let's look at it. I like the stock. You got Endeavor Silver. The low is 288. The high is 598. Now, this stock, folks, is a highly volatile stock. It moves. But, you know, this is a nice little setup, man. I mean, what it's done is this. And many of these equities did this, folks, okay? what they did is this. They broke down May 27th. Okay, so they broke under their trading range, had some juice behind them, and then they recovered. This happens to be one of them. We went into the May 10th swing point today, May 5th swing point. That swing point was 491. Volume was 821,000. We came into it with $1 million. It's a good setup.
Yeah, it looks like, I'm sorry to interrupt there,
No.
From exactly 1 year ago, it's been doing a sawtooth.
A sawtooth?
Up, down, 3 to 6.
I see it. Yeah. I like the setup. The gold report come out today.
Yeah.
If you haven't test drove the gold report, folks, you can do it 30 days. Now, this one here, I could have bought it. We didn't because I was buying a few others, but this would have been on the list. This is a good setup, man. But it's volatile. I can tell you that. It will move around very quickly. But when I look at this thing wants to go to 593, and if you have volume at 593, you can really get some juice. And right now, I like the way the golds are set up, and I like the way the silvers are set up, and that's been, when I'm talking about I like it, I have liked them since last June, folks. What the difference is that it's spread across many of them this time. Okay, there's still a couple dogs out there, but this is the first time in the last week and a half that I've seen even some of the dogs wanting to go higher.
Right.
So that's
Right.
saying to me that there's larger players, meaning funds, in the equities that are starting to build up positions. So
Understood, yeah. Great.
Cooking, brother.
Thank you, Tom.
Have a great one, man. Have a safe one. And if we do go over to the XAU and the HUI, folks, the XAU, HUI, they both look to be set up ABC structures on the way up. The XAU is at 92.39. It got inside the range. 90 is the range, meaning the higher range. It got inside the range. We go to the Gold Bugs Index. We're at 220. I think this one's 221. Yeah, it's no, it's 216. She's inside the range also. So it's really going to be intriguing to see, will they be able to get the volume as they get into the swing point? Silver is still stronger than gold. We'll see how that shakes out. There's no doubt what is unusual is that it looks that the gold wants to go, silver wants to go, the dollar wants to go. All topside, by the way. Okay, so we'll see how that shakes out, but that's the way it looks to me at this particular point. Let's go back to Amazon for a second. So we go over to Amazon. So Amazon tomorrow is going to be coming out with this phone. The Amazon commoditizes everything, okay? And they're going to do the same thing with the phone. The real key is going to be, is the phone any good? And will people get the phone? And exactly how much product is Amazon going to push into the phone? Meaning, can you order? Well, of course you can order from the phone, but how easy are they going to make it? I happen to love Amazon Prime. I mean, check this out, folks. The way Amazon Prime works, okay, it's $79, okay, for the year. You can get deals on Amazon Prime that are unbelievable. Now, and I'm talking about commercial deals. We've had toilets delivered, okay, on Amazon for nothing, for zero, okay? I don't know how he does it. It doesn't matter. But the bottom line is that he basically, just pushes everything out. Now, that phone is going to be all about not you and I talking to each other. That phone is going to be about, what type of deals are coming across the table, what you can order, how quick you can order them, and how easy it is. So we'll see where that shakes out. Is it going to affect Apple? Well, let's go over to Apple and take a look at Apple for a second, because Apple still gets a premium, no doubt. Apple's at 92.08. Try to get to high today, couldn't handle it. We'll see where this shakes out on Apple. When I put Apple and I put this on a monthly basis, what you have is pretty dramatic. The first high that was established at $700, we got a 7-1 stock split now, was 2.3 billion shares. You come down with 2.7. Last month we went up with 1.4, so it's 1.4 versus 2.3. Bottom line, Apple wants to go south. Amazon wants to go south, by the way, too. This is going to give away everything. You stay right there, folks. This is Tom O'Brien. This is TFNN. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mob BI in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 27, Nasdaq up 16, S&P's up 4.5, and SunTrust Banks, they just agreed to pay $968 million to resolve federal and state claims that a unit misrepresented the quality of mortgages the bank originated and deceived homeowners on loans that it serviced. The thing that's amazing there, SunTrust must make a lot of loans. Because that is a big fine, no doubt. $968 million. I love what the CEO said, so check this out. This is pretty wild. So, like most financial institutions, we are addressing issues related to the mortgage matters stemming from the financial crisis and recession period. William Rogers, Chairman and Chief Executive of SunTrust, said in a separate statement, "We are pleased to have resolved these legacy mortgage matters." So if you just dig into that a little. Like most major financial institutions, that's right, they were all pushing junk, no doubt about that, folks. We are addressing issues related to mortgage matters stemming from the financial crisis in the recession period. That right there, that is not a fact. It wasn't from the financial crisis and recession period. They made the financial crisis. That's the bottom line, folks, because when you're selling junk on a continual basis for 3, 4, 5 years, well, actually, let me see how long they got these guys on this one for us. So, this agreement went from January 2006 to March of 2012. That's what it went through. The reality is that they were selling them even before that. But anyway, you get the gist of it. It never changes. The thing that's amazing, this is what's going to be absolutely bizarre about this. Let's see, we're 7 years into it now. You got to give it about another 12 years. Another 12 years, it's going to be the same thing. If I've learned anything in this business, the cycles, basically in the banking business, are anywhere from about 13 to 18 years. Cycles, real estate, the whole ball of wax. And you get new generations, new regulators, new leaders, new everything, pushing it out. And bottom line, they claim it's different every time. Well, guess what? It's not. It's just the way it goes. The real key. Now, if you look at the context, now this is what gets really cool too. And I'm going to shift gears on it just for a second here, just so you can understand the fiat money system as it stands. Okay, and believe me, yeah, we're in the gold market and all, but this fiat money system is going to be here. If you borrow correctly, okay, it's a very good system. If you don't, yeah, you're done. But watch how the system works. The system has to have bankruptcies and blow-ups in them. It absolutely does, because mathematically, there's no way, there's never enough money to pay for the interest. That's how it goes. If you do the math on it, as debt goes out to the world, there's never enough money to pay the interest. So what has to happen cyclically is that there has to be bankrupts inside all of banking systems. That's what it comes down to. Yesterday there was a big number. Let me see if I can find this. Well, I know what the number is. The number yesterday, it wasn't that it was yesterday, but I suspect in the last 4 or 5 months, China has overtaken the U.S. As the amount of debt, corporate debt, that's outstanding in the world. So, and that'll make sense. There's no two ways about that. That'll make sense because of the fact that more people, more business, all of the above. We go take a look at the euro. So euro still hasn't moved. This little baby is getting closer to its bottom. And the bottom that we're talking about out here, folks, is 134.77. We hit 135.74 today. It's building cause to blow that out. Now, when that baby gets blown out, and I expect it's going to get blown out next 4 or 5 days, we're going to see some fast movement in the marketplace. You'll see the dollar, dollar to me looks like it wants to go topside. As I said in the last segment, what is wild and unusual is that gold and silver look to go there also. That tells me that this push in the dollar, gold, and silver will end up being a currency event. That's what it really comes down to. That folks are going to be clamoring for basically hard assets. And the dollar, I understand, is not a hard asset, but what the dollar does give folks, no matter where they are, is liquidity. Everyone accepts the dollar. That's a big deal. So that's the way this is straight coming down the pike right now. If we go take a look at the interest rate structure, and I put up the I'll put up this 10-year. We take a look at the interest rate structure around the world. The United Kingdom, who did go up on their rates last week, is at 2.7 on their 10-year. We're 2.6. Now, the pound is pretty strong. The rest of these, though, in Europe, absolutely make no sense. France is at 1.7. So you can lend money to France for 10 years at 1.7. You got to do it in the euro. Euro goes down. You only get paid 1.7. Germany, 1.3. Italy, check this out. Italy's 2.8. Spain is 2.6. Check this out. Spain is 2.698, and we're 2.651. Who do you think you want to lend your money to, Spain or us? Well, you can go to Portugal, 3.4. It's pretty wild, folks, okay? So where does that come back to? That comes back to the bonds. The bonds, when you look at the correlation of the world, of where we are, rates are still too high. Because it's always a competitive atmosphere, folks. That's what it's at. It's not what we are paying. It's what we are paying in correlation of what the world, pension funds, sovereign states, colleges, foundations, how they're putting the bond part of their portfolio to work. And it's something you want to remember, whether you buy a bond or don't buy a bond, inside large institutions, meaning states, pension funds, sovereign countries, foundations, they have a prospectus. And inside that prospectus, there's going to be a certain amount of bonds, AAA bonds that they have to own, period. No, just period. That is a defined number. A defined number, which you also have, which you can break this down pretty easy, is you start adding up the countries that you want to basically lend to. You put those together. If I was only a fundamentalist, you put that together and you'd see why these rates will continue to go down. What blows my mind on a continual basis is each and every time people keep saying the rates are going to go up, I'm saying, well, why are they going to go up? France is at 1.7%. So what, we're going to go up to 3%, and France is still 1.7? Not even close. You stay right there, folks, and we'll come right back. We finish up 27, NASDAQ up 16, S&P's up 5.5. Stay right there, folks. Come right back.
Many of our new listeners have heard about The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's get a Rich in Taunton, Mass. Hey, Rich, what's going on?
I just want to let you know that I listen to a bunch of radio shows and financial related, and TFNN has the best stuff, most interesting, even if you don't understand everything about it. It's really good stuff.
Thank you so much, man. I appreciate that. I love the part about not understanding it. No, I know it's a different language. I mean, well, the way I speak is a different language anyway.
Yeah.
Oh, listen, man, I appreciate you listening out there. All you folks, thank you so much, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The summer's here, baby. I heard it's getting a little hot up in the Northeast. That's a beautiful thing. Get your bones nice and hot. You got to remember that cold winter you had. Let's take a look at one of our Believe cards. This is by Alberto Ferretti. I start with the idea that nothing is impossible and everything can be done in the end. It's a beautiful thing. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 27. NASDAQ up 16, S&P's up 5.5. Gold contract down 450, trading at 1,270 an ounce. Now, what you have with gold is this, folks. Gold contract rejected lower price this morning. Did it with lighter volume. We'll see, in fact, is this going to be an ABC structure on the way up? That's the way it looks to me right at this particular point. The B point on that is 1285. We got to 1273 today. You got to 1285 yesterday. What we're going to need is you're going to need contracts of more than 98,000 as you get into that 1285 level. If we get that, you know, 1307, A to B equals C to D. Your next swing point, once you get back inside this 1278 area, is the swing high out there from April 11th, and that high is 1323. Silver, we take a look at silver. Silver's set up the same way. Silver is actually stronger than gold, SIN4. What we have with silver is this. Silver rejected lower price today, did it on lighter volume. We're at $19.74 right now. This also looks like an ABC structure to me on the way up. Your B point is 1987. Your volume characteristic is 48,000 contracts. So what silver will have to do is have an expansion of volume as it's getting into it. Gold did a lot of volume out here today. Both of them look like they want to get into higher price. Oil market. We can take a look at oil. Now, what we had with oil is this. Oil had broke topside, has wide price spread, has accelerated volume. You're back 31 cents today, and you're back with light volume. We're back with 222,000 contracts versus 321. So oil looks to me like it's going to make one of these spikes to the 110 to 114 area. Where am I getting those prices? 110 to 114 were the last two swing highs, 2011, 2013. In fact, it was August of 2013. Bonds. We take a look at the bond market. What we have with the bond market is this. Now, the 10-year had a little juice on the way down today. You know, not higher than it went up, but had some juice. 1 million contracts. We'll see how it basically attacks this 123.25 level, which, by the way, is only 3 ticks lower. Can it run down? It can run to 124.01. 120. See, 124.01 is where it had monster volume. Let's go pull up. If you pull up the TLT and see the correlation inside the 20 plus, you can see that it's pulling back with lighter volume. We did 6.8 million shares today, going into 9.7 million. 30-year. 30-year, when you look at the 10 to 30, the 30-year is much stronger, which totally makes sense, by the way, because rates, short-term, if it's short-term rates, you know, that end of the curve will move quicker. 30-year, We came down with 292,000 contracts. That is going into 447. So in order for bonds to come down and break those lower swing points, they are going to need a lot more juice. King dollar. So it's amazing. King dollar wants to get into 81.50. It rejected lower price today. Did it with lighter volume. We'll see how it handles this 81.50 and how we get there. Euro looks to me like it wants to break out its low. And, of course, that's the natural correlation. The euro is trading at 135.47. You break the 134.94, that's only 500 ticks. That's nothing, okay? Bottom line, you'll get to 132 in a heartbeat, and that'll be a monster move. The thing which is unusual, which I said last hour also, is that it looks to me like gold wants to go, silver wants to go, and the dollar wants to go topside. After the close out here today, Adobe come out with their numbers, ADBE, where is she? Adobe closed at $67.54. She's trading up $5 right now. She's trading at $73.74. Let's see what they say number-wise. This is what you had. The estimate was 30 cents. They come in with 37 cents. That's a big number, 20% over the estimate. That was the bottom line. They see the third quarter. They don't see anything that big. The estimate was 27 cents. They plan on coming in from 22 to 28 cents. Revenue-wise, what we had is this. Their revenue, the estimate revenue was $1.03 billion. They came in $1.07 billion. So at $72 right now, that's her last high, I believe. Yeah, 71.11. Let's pull this back a bit. See what else we got here. Put this on a yearly week. I'll put it on a 3-year weekly. Okay, so 3-year weekly. She's going to go after this over the high of 71. This could get interesting. This could be a very large ABC up. Your A point, this would be a monster ABC up. 42 would be A. Be $30 A to B. 87 bucks. You get the volume in this tomorrow, that's what it's going to be. Now, this is a classic, too. If you want to see how equity's supposed to act, folks, okay, meaning volume on the way up, you pull back with lighter volume, what you're going to see here with Adobe is this. Adobe had a high out there of 71.11. Didn't have volume. But it had plenty of volume going all the way up to 61. 53 to 61, good volume. Goes to 71. What does it do? It pulls all the way back to 57.50 with 20 million shares versus going topside with 33. That's pulling back, recharging itself, getting ready, going topside again. We'll see how it goes after this high. If I put this on a monthly basis, what you're going to see is this is a rocket ship period. Pretty amazing. On a monthly basis, we've done, let's see, 33 million thus far. You have 77 million up there, and today is the 17th. 17th is Flag Day, I think, right? No doubt. The solar stocks today, you talk about something taking off. Man, oh man, this was pretty amazing. There's no doubt about it. If you take a look at SCTY, this SCTY, yes. You take a look at, this is Solar City. It was up $9.65. And this came off the bottom. And we put this on a 2-year weekly. What you're going to see, hey, this is pretty cool, too. So check this out. Man, this is a classic. This is a classic. Okay, so check it out. You want to see the out of time in the trade, how it just comes back, lighter volume, whole ball of wax. You broke topside on this the week of October 18th, 45 to 59. Has the juice. 49 million on the swing point, takes out 24 million. Gets up to your next swing at 79. Man, 88. This is going to go a lot higher. This is a trip. And then how did it back in? Okay, so first test had 36 million shares going into 49. Then guess what? It came back down 2 weeks ago with 25 million. So the correlation is this. 25 million the week of June 6th. Testing 36 million. Testing 49 million. Reject it. has lower price, goes topside. Thus far this week already, we get 29 million. That is basically, let me pull this back a bit. This is a monster ABC up. Put it on a monthly. Interesting. So, A is 28, 60-point ABC. That's $105. That's something to keep your eye on, folks. So here, what you're going to want to do, you're going to want to buy a pullback in this. This is going to be a monster. Man, oh, man. Solar City, 877-927-6648. You stay right there, folks. That man, Mr. Andy Hicks, going to be coming back. We're going to be bisecting and dissecting what? The commodities, the thing we use each and every day. Stay right there. Coming right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 27, Nasdaq up 16, S&P's up 4.5. And as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, 3 to 4 Eastern Standard Time, Andy has an outstanding show right here at TFNN. And at TFNN, folks, we do 9 hours of live programming every trading day. You can get all of that right on your cell phone at TFNN.mobi. If you'd like to get Tiger TV, which gives you the charts, plus the audio, just go to TFNN.com, hit the device on the right-hand side, little box. You'll see it has devices in it. Our servers will know what type of device you're on. You'll get delivered Tiger TV. As you're at TFNN, Andy has an outstanding newsletter. It's the Technomento Commodity Report. You can test drive it absolutely free. Go to newsletters, trading newsletters. You see the Technomento Commodity Report right there. And what Andy does, we talk commodities, and of course we talk the future market and commodities, but he transfers that commodity knowledge in the futures market into the ETF and ETN structures. So if you like trading equities, bottom line is that things have changed over the years dramatically, and on just about every commodity, folks, there is an ETN or an ETF. Andy Heck, how's that mouth of yours?
It's better today, thank you.
Oh, the Godfather disappeared, man. Where's the Godfather?
Much better, much better. Last week when I called in, it was still a little raw. It's still a little sore, but it's doing much better. Thank you for asking.
Man, you sound like you're from Boston. You're eating your eyes, man.
Am I?
Yeah, I like that.
Really? Really?
Better.
Oh my God. I better start watching the Yankee game every night.
Oh man,
that'll bring me right back.
That will.
Yeah.
So where do you want to start, man?
Where do we want? Interesting.
Okay.
And it's not really commodity related, but it is a little bit.
Yeah.
I read an article about Warren Buffett came out and he said that the premiums for catastrophic insurance for weather and stuff are far too low.
Okay.
And that he's not going to be, he operates General Re. It's one of the Berkshire Hathaway companies, big insurance company. He says they're too low for him to grant that insurance. They've come down too low.
Right.
And it's very interesting. But the demand for bonds backed by this catastrophic insurance are going up because certain pools of capital, hedge funds, some individual large investors, they're looking for a few extra basis points, so they're happy to take that risk on.
I know, it's pretty sick.
Yeah, right. I'm just wondering, look, the catastrophic weather and stuff affects the markets that I watch every day, and I'm saying, this is a year where there's a lot of risk. There's a lot of risk, and these people are granting these things for nothing. That's another thing that's telling me, hey, this could be interesting.
Listen, man, so check this out. I just pulled it up, folks. Investors this year have snapped up $5.76 billion of the catastrophic bonds this year alone.
Yeah.
The fastest pace of issuance ever measured by the data provider. And what this is, the streak's been long, folks. And us being in Florida, we know the streak's been long because the last time that we've had, now they in New York they got hit, but in Florida we haven't had some serious problems for almost 7 or 8 years. And now what gets interesting if you look at a probability chart, though, is that year, we had 5 storms come in.
Right.
So it's like...
Tom, Murphy's Law?
Yeah.
Right?
Yeah, no, listen, man, no, listen, it's serious business. And when you... The thing is a mind blower. There's no doubt about it. When you go out and you're talking... So let's see. 8.5%. That's what they're getting on these things.
You know what I call that? I call that eat like a bird and poop like an elephant.
Right.
You know what I mean?
Oh, totally, man. Right.
Although I don't use poop usually, but we're on the air. But seriously, we're
actually. Actually, the yields are only 4.7%.
Yeah,
4.7.
4.7. What are you getting?
4.7.
You're not getting paid for the risk.
Sick. That's
sick. That's sick. I mean, that is sick.
Yeah.
That is high risk, low reward.
Right.
I'm sorry, not the kind of trade I ever want to do.
No doubt.
You know what I mean?
Yeah, I do.
That just really struck me today when I saw.
Well, you know what's interesting, that we'll stay on Buffett for a second, folks. What's going on? If you heard it today, the bottom line is that the guy that his name's David Winters, who was going against Coca-Cola, and the aspect of they were giving their their board astronomical amount of shares. He came out today and said that, hey, listen, he sent a letter to the board, actually, saying that you guys are cooking up a deal with Warren Buffett to take the soft drink maker private, right? And Buffett, of course, said, no, there's no way in all this. But let me tell you something. I was looking at this a little, and I said, I was watching.
There's trouble in paradise.
Well, you know why? This is the amazing part, folks. This is where you better make sure you do your homework just in general. Because I heard the story on CNBC this morning, Becky Quick saying, no, I called Warren. He says, he's out of her mind, all that. And then I start looking at it, and on the story on Bloomberg, I attached it to Heinz. Well, guess what? The company, folks, that Buffett is hooked up with, it's G something, right? 3G Capital, right?
Uh-huh.
They took Heinz private, folks. Yep. Don't think for a second that they can't. Okay.
And why would he say that he was if he was? He'd be crazy to say it.
Oh, of course. No, of course. And there's no doubt about that, man. You know.
Right.
And
very interesting.
It is, man, because see what was really weird about this? It would play into the aspect of the amount of options that actually.
Exactly.
Yeah. Exactly. And that's what this guy Winters is saying. He said, hey, man, they get a longer-term plan here, man, and they're laying it out. And he's accusing Buffett of a sweetheart deal. Period.
And you could be assured that the price to take that company private will be lower than the lowest strike price of those options.
Yeah. Oh, yeah.
Right.
Yeah.
Right.
No doubt.
Yeah. Very interesting world. Warren. Warren is quite an interesting character, and
he's the ultimate promoter. There's no doubt.
He's the ultimate. He's a PR machine.
Yep.
And
for free.
Right, exactly.
Yeah.
For free. And the world follows him because, he's got the capital.
There's no doubt.
And he's been right.
There's no doubt. There's no doubt.
All right, so let's get into a little commodity action here. Crude oil.
Yeah.
As long as it stays above 105, the sky's the limit, in my opinion.
Yeah, there's two spikes. I mean, I brought up the continuous contract, and you get that spike from 2011 and 2013. Looks like they want to get hit, man. Right?
Here's the deal there. These insurgents who are really dangerous.
Yeah.
A real dangerous group. If we're talking to Iran and they're worried, these people are real dangerous.
Right.
If, Baghdad is one thing. If they go to Baghdad and then they head south to the oil fields, oil will scream. It doesn't even matter if Obama sells SPR oil. Oil will scream. And we're seeing the Brent spread widen today.
Okay.
Brent is up. WTI is down.
Right.
This is and believe me, that the insurgents know. Listen, they went into Mosul yesterday, and what did they do? They took $500 million worth of cash and gold.
Not bad, huh?
You don't think they're going to go in and want to take those oil fields?
Oh, of course they are.
Of course they are.
You stay right there, folks. Andy and I are coming right back. 877-927-6648. And don't forget, folks, Andy's got an outstanding newsletter. It's the Technomento Commodity Report. You come to our website at TFNN. You go to newsletters, trading newsletters. You can test drive it right here, right now. Andy and I come right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck, and we are talking commodities. So, Oil, no doubt, Middle East eruption, it's all of the above. There's no two ways about that.
Yeah, absolutely. I mean, technically it looks okay, and fundamentally, hey, it's going to be day by day based on the news here, and I expect to see volatility really pick up in crude.
Yeah, no, there's no doubt. I mean, when we busted topside last week, folks, I mean, that was a fast move, had wide price spread, accelerated all of the above.
Right, and now we're just waiting for the next thing. Now let's take a look at wheat. Why don't we take a look at wheat? I put a wheat chart up here.
Okay.
Wheat has been, elevated down. No question. Elevated down. But I think it's running out of gas on the downside here for a couple of reasons. One of the reasons is, look, the U.S. is not the biggest exporter and producer of wheat. Australia's a big producer. Ukraine's a big producer. Canada's a big producer, amongst other places. Argentina. It comes from a lot of places.
Okay.
Now, the wheat price was too high. Our wheat was not competitive with the rest of the world. Now, below $6, we're becoming more competitive.
We just went from $7.50, folks, to $5.90. Yeah.
Right. Right, 581, yeah. So we're active month at 581. The structure of the market, the deferred contracts are trading at premium to the nearby. I think we're coming into, I think that about 560 is kind of the bottom here. I mean, if we go through there, that's where I peg support here. I think it's a good low risk, high reward, unlike those catastrophic bonds.
Yeah, right.
A low risk, high reward trade here. Wheat for a corrective bounce. And there's a little gap on the charts back on, let's see. There's a little gap on the charts, which we always like to see if we're going to go get bullish. Back on May 27th, we had a higher of 648, and then the day before, we had a low of 651. So there's a little gap on the charts that needs to be filled. And as you know, those gaps tend to get filled over time. So
what about cattle? Cattle, I guess, it couldn't hold that high out here today. It's kind of interesting.
Well, it couldn't hold it high. It's very hard to fight this market.
I agree.
Look, I am certainly a better seller up here than a buyer, but I have to keep my eyes open. This thing has been a runaway bull market. Just the price of cattle. There's a fundamental reason for this. There's not a lot of cattle around, and demand for beef is skyrocketing around the world.
Sure.
So I read that the USDA said that in 2015 the United States is going to be an importer of beef.
Really?
That hasn't happened before.
Really?
Yeah.
That means that grazing land then is worth a lot of money. That's why they're fighting.
It is.
They're fighting right in Nevada, right? That's what they're fighting about, right?
Yeah. Well, Nevada, there's not a lot of grazing land. Cows can't graze on the desert. It's Texas, really, where the grazing land has been, depleted. The grass, the very dry conditions there. It's been very difficult for the cows. But the point is, look, I'd love to sell this thing here, and can it back off to $1.40, $1.36? Yeah, sure, but longer term, ground beef prices, Tom, are 76% higher than they were in 2009.
Yeah, interesting. Right.
This is affecting
because you're saying that the demand aspect, period, in the world is going up, right?
Yes.
Yeah, right.
For beef.
No, that totally makes sense because just China alone coming up the food ladder would do it.
Right, exactly. And they are eating more beef over there. And it's not just beef. It's chicken, it's fish, it's poultry, it's everything is going up.
Sure.
So it's expensive to eat?
Listen, it's expensive to eat good food. It's if you just eating grains, they sell them to you for nothing, but to stay healthy, it's tough.
It is tough. It's tough. But, these grain markets have been under a lot of pressure, which actually is positive for things like cattle and hogs because the feed will go down.
Okay.
But, you got cattle, you got a small herd, so that's a problem.
Right.
The hogs, you got the PED virus. Now, there's a new vaccine for the PED virus.
Okay.
But, they have 2 million doses out there. I think 8 million to 10 million pigs have died already of this thing.
Yes.
These are difficult markets right now. It's hard to pick a top. Very hard to pick a top.
No, there's no doubt about that. What about coffee?
Coffee. Interesting. Let's throw a coffee chart up there.
So that was down
now,
3.5 cents today.
Yeah, I mean, but it's been trading around 170-ish for a while here. It's kind of going to sleep. Is that there's probably some downside here. They're going to come out with the Brazilian numbers in July, the final numbers, and then maybe the crop will be a little bit better than what they thought when they were going through the drought.
Yes.
India is the third largest grower of coffee beans in Asia, and they've been having good rain, so that's been positive for their coffee crop. So, all that is feeding into coffee. But one thing I'll tell you, it's not going back to $1.15. It goes back down to $1.50. I think it's a raging buy.
Now let's go do one of your favorite commodities.
Yeah, which one?
Natural gas.
Yeah, I like that. You see, I heard David White this morning. He says he's looking for a top in natural gas. I'm not so convinced there. I got to tell you, these inventories are so low. We're 30+% below last year and 35% below the 5-year average. There was kind of a spike on Sunday night.
Yeah.
Brought it up to 488. I think someone was playing with the market. And, they hit a stop or something, a short position stop out or something. But it's sitting around 470. Last week, the inventories came out. They were 3 billion cubic feet, which is nothing. I mean, less than expected. And they rallied the thing strongly. We'll see what it is Thursday. The bottom line is, if it's a hot summer, if there's storms, this thing's going to go higher.
Well, here, watch this, too. I mean, the reason I just brought this up, is that when we start talking about oil, right, if oil spikes, I know that natural gas, yes, it's used where it is, but that will go, too. I mean, and it looks to me like natural gas is set up in a monster ABC up. Like, when I look at it, I'm saying to myself, hold it. It looks to me like the A point is 350, your B is 490, which is $1.40, and your C is 430. So it'll be 530. What did I say? $1.40.
$1.40.
$1.40. So 590. Let me just.
We saw that already this year.
Yeah, it's $1.40.
Yeah.
Because the correlation, if you want to see the correlation, folks, if you don't have a futures chart, well, if you're watching Tiger TV, you see I have that futures up. But I'll put up the UNG for you, and you can see the same correlation inside. And the UNG is the U.S. Natural Gas Fund. But I'll show you the correlation inside this with volume. It's a clean setup, man. Your A on this is 1691, which is a low of November. Your B is up at 27. So 16, yeah, you get $11. Your C is 23, 33. That's $34. And
you see, yeah, go ahead.
It just has volume, and it's been going sideways. It's going to go test those. We'll see whether they get the juice. But
and I have to tell you, $5.90 in natural gas during the summer, $5.90 gets you $7.50 because this will be a feeding frenzy, and the reason it'll go there is because demand is up, or because there's a storm, or a whiff of a storm, or fear in the market, or because crude oil trades 140 or something like that.
No, that's why I'm with you. Because when I'm thinking that through, is just even the spike itself, folks. Okay, would have to do, and I learned this from you, is that's where the interchange comes. There's not all of us can go from oil to gas, but large corporations, they have that ability, right? I mean, some large corporations have that ability.
Do. Right. Yeah. Right. And look, natural gas, man, it is a tight market here. So, crude oil is not a tight market in the U.S., but the fear will come, with something that's going. But they're highly correlated. Their energies. You'll also see coal prices go up, and you saw actually solar stocks rallying today. Very interesting. It's the whole energy sector, and this Iraqi thing. I think it's probably a little bit worse than we're seeing on TV.
Well, what I did see, this is what cracked me up. Well, not cracked me up. Listen, I hope the whole thing straightens itself out, but I don't believe it will. But you had Richard Engel, which I really like. He was given an update out of Baghdad, and what he said, folks, is that it was 3 days ago. The thing looks like it's falling apart. Now, the fact of the matter is, the troops are out, and it looks fine. What I got out of all of that more than anything, and this is important just for anyone to understand in the context of war, okay, is people are wondering, how did 50,000 Iraqis give up their arms, and you're talking 2,000 or 3,000 fighters? The bottom line is that you 2,000 or 3,000 fighters that were killed. And in war, folks, okay, that's all that matters. And, you know, and they got it. Yeah,
they got it. Scary, very scary prospects.
Listen, it's the bottom line.
Yeah.
Listen, folks, hey, Andy, thank you so much, man. You have a great one, safe one. Look forward to speaking to you tomorrow. Come over to our website at TFNN, folks. You can test drive Andy's newsletter right now. Go to newsletters, go to trading newsletters. You see the Technomental Commodity Report. We'll come right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 27, Nasdaq up 16, S&Ps are up 4.5. Let's go overseas. We'll start with the FTSE. We take a look at the FTSE. So FTSE today gets down to 67.36. Now, the FTSE, folks, has been trying to break out of its highs for 6 months. Each and every time it's up to the highs, it gives it up with light volume. We're at 67, 66. The bottom of this range is 64.92. It's making its way down to that. What we did on Friday is that when we broke from 68.42 to 67.58, you had 638 million shares versus 672. So not bad volume-wise, but bottom line, you had an expansion of volume in correlation of how you hit a high. We're at highs up there with 390 million. What you did today is you got into a low, rejected a low, not by much, but did reject it. What you will see, though, is it's going to make its way down to the bottom of this consolidation that it's been in, by the way, for 6 months. If we take a look at the DAX in Germany, sideways move. Couldn't figure out what it wanted to do today. DAX got to a high of 99.82, a low of 98.61, and closed out at 99.20. Now, the DAX, which trades like the NASDAQ, is not inside its lower range. The lower range on the DAX is 97.94, so you're talking about 120 points lower. You know, we'll see whether it's going to end up going down into that level. We go over to Asia. We take a look at Asia. What we have in Asia is this. Shanghai still can't see straight. That was down 1% last night. The Hang Seng was off 0.5%. We take a look at the Hang Seng. Hang Seng right now is trading out at, that was really a flat market. Even though it was down 0.5%, when you actually pull it up, it was a flat market. Hang Seng's at 23,200, and that does look to me like it wants to go up to the 24,400 mark. We go take a look at the Nikkei 225 in Japan. What we have with the Nikkei 225 is that she was a sideways move, was up $42. Nikkei, though, is building cause to get into lower price. And the Nikkei in general, folks, okay, is something that, you know, when it gets into that lower price, that 11,500 area, you're going to want to be buying it. You're going to want to be all over it. And what that correlation has to do with, no doubt, is how we came off the bottom after this has been an absolute disaster in the Nikkei. You got to remember, the Nikkei went from 38,000 in 1989 down to 6,900 in 2008. You talk about hammering. But guess what? It built cause, and the cause it was building was pretty tremendous, and then it took off like a rocket ship. It took off like a rocket ship December of 2012. So the pullbacks with lighter volume, you want to be all over, because the way that the Nikkei is set up is this. Once it gets into, let's picture this here, a long-term deal in the Nikkei. You pull back to 11,800. 11,800 would be where the stock, the index itself actually broke topside. And that was June of last year, okay? So you pull back into that. This looks like, and we have, as we've been coming back, by the way, folks, it's been coming back with lighter volume. We came off a high of 16,200. We're at 14,009 lighter volume. So if, in fact, that's going to be an ABC structure on the way up, it's huge. It's almost a Yeah, it's an 8,000 ABC structure on the way up. And what that would line up is a 20,000 Nikkei, and the 20,000 Nikkei will bring you back to 2,000. You break that, guess what? You really get some action topside. So that's a longer-term take on the Nikkei. If we go over to the actual currency, the yen, it all has everything to do with the yen. The yen right now is at 102.16. This is yen versus the U.S. dollar. And when you take a look at this, folks, okay, you can see why the Nikkei can go dramatically higher. Why? Because the turnaround in the Nikkei is that in I'll just do it from 87. Yeah, from 82, the Nikkei was 225 U.S. dollars to 1 yen. Now it came all the way down to $75 to 1 U.S. dollar. That's strong like insane. Well, guess what? That has turned also. That came off the low. That came off the low also in December. So the yen was getting weaker. Nikkei getting stronger. I expect you're going to see the yen start making its way up over the year, 2 years to the 147 level, to the 160 level. Well, it's going to be intriguing there. If, in fact, that plays out, you save your U.S. dollars, folks, because what that means is that we're going to be able to go to Asia, we're going to be able to go to Europe, and that king dollar is going to be worth a lot more money. And, of course, what that means, and I'm sure there's plenty of folks that don't remember when the dollar was worth a lot of money, you could take vacations and be very rich in different countries. If we go over to the Canadian dollar for a second, because the Canadian dollar, many times is traded 70 cents on the dollar. We take a look at the Canadian dollar right now. That is out at, she's at 108. And, bottom line, she wants to go to 130. And so the 130 is going to bring the Canadian dollar also weaker in correlation to our own U.S. dollar. And what's that all about? Oh, I guess it's all about the dollar technically reached its low in 2008. It had its high in 2001, went from 121 down to 70. We're out here right now at 80.71. And when you look at the world, it's pretty easy to see why people would want U.S. dollars. If you're going to buy our debt market, guess what? You need U.S. dollars. If you're going to buy debt denominated, corporate debt denominated in dollars, you need the U.S. dollar. And in the world, outside of the United States, last year, there were more U.S. dollar denominated deals than have ever happened. And what that is all, I'm talking about corporate deals. I'm talking about companies, whether they're in Russia, whether they're in Europe, whether they're in South America, whether they're in China. They're issuing debt in U.S. dollars, and the reason that they're issuing debt in U.S. dollars is that they can sell them. That's what it comes down to. The folks on the other side, meaning getting their dollars back, they're not guaranteed that the dollar will be worth more or less, but they know they want to deal with the U.S. dollar, and that totally makes sense. The reason it makes sense is this, is that if you can deal with one currency, okay, guess what? You don't make these wild bets in the foreign currency market and lose your money, like Greenpeace losing $5 million. What are they doing in the foreign currency market? Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Look forward to speaking right here tomorrow. Go get them, folks.
With the launch of Tiger TV.